Hi everyone, this is Emily Ching from Jovi Realty, and today I am going to talk about closing costs that home buyers need to buy when they purchase a home. Typically, a general rule of thumb is to prepare 2 to 5% of the purchase price of your new home. And that would include all that is listed here, except for the down payment and GST. Those are not included in the 2 to 5%. Okay, so closing costs will be legal costs, appraisal fee, home inspection, property insurance, mortgage default insurance, mortgage life insurance, land survey fees, prepaid taxes, prepaid utilities, property transfer tax, and moving expenses. First of all, we go to the legal costs. That is the fee that you will pay the notary or the lawyer who would be representing you in doing all the paperwork and communicating between the brokerage and your lender. Okay, so what does a notary do? A notary is a person authorized to perform certain legal formalities, especially to draw up or certify contracts, deeds, and other documents for use in other jurisdictions. So they will take care of all the paperwork. They will also take care of registration of the title so that the title transfers to you. And the lawyer will do the same thing. The only difference is the lawyer can represent you legally if that's necessary. Okay? So the fee ranges from $1,200 and up, plus the necessary taxes. Next is the appraisal fee. So appraisals are usually or typically required by lenders. Some lenders, from my experience, don't require it, but most do. So the lenders, since they don't go to the property to check out the properties themselves, they would send in an appraiser who are basically their eyes to see if the property is okay, if the price matches what has been sold in the neighborhood. So an appraisal is an expert estimate of the value of something, and in this case it's the property. And the fee ranges from $300 to $450 plus taxes. Like I mentioned, some lenders require it, some lenders don't. Some lenders may pay for it, but most don't. So you will have to find out from your own lender. Inspection. A home inspection is a report on the condition of the home. So before you purchase a home, you would want to know if everything is okay. And if there's anything that needs to be fixed, you will find out then how much it'll cost. Then you can prepare yourself for it. And if it's a major expense, then you can probably renegotiate the price with the seller. So there are many options at this point if the inspection finds something that's not very good about the property. But generally, an inspection will give you peace of mind because you need to know what you're buying. Okay, so the fees range from $350 and above, depending if it's a condo or a big single detached home. Some inspectors will also charge additional fee for an older home or a home with a secondary suite, a crawl space, a laneway home, and sometimes some may charge you for a longer drive. Property insurance. The property insurance covers the replacement cost of your home. The premium will depend on the value of the property. So in case of strata properties, you will only insure the contents and the renovations done inside the unit. Okay? So obviously for single detached homes, the whole house needs to be insured. The reason why the strata, you only insure the contents and renovations, the building itself or the exterior of the building is covered by the strata insurance. Okay? Mortgage default insurance. This will only apply if your down payment is less than 20%. It protects the lenders in case the purchaser or the borrower fails to pay. It also enables buyers to purchase earlier at competitive rates, thus benefiting from the growth in home equity sooner. So let me explain further. Okay, so let's say you are looking at a property worth $420,000 and you can afford a 5% down payment. So that converts to $21,000 and leaves $399,000 in the loan. The premium for the mortgage default insurance for this amount is 3.6%. So that converts to $14,364 that you have to pay for the mortgage default insurance. But this amount is stretched out through the amortization period. So if you have 25-year amortization period, then the cost per year is only $575 or $48 a month. So to explain it further, so instead of, let's say you don't have this right now, the $21,000 down payment, and you want to, if you want to pay 20% down payment, so you have to save up for it, right? So it depends on how many years you need to save up for it. Let's say it takes you another 2 or 3 years, which means the purchase of your property is delayed 2 or 3 more years, and by that time property prices might have appreciated, and most probably it will, and that means the amount that you saved, the 20% amount that you saved based on this, is not going to be enough again at that time. So what this mortgage default insurance does is it fast tracks you to own a property, and the cost to you is $575 a year, but you're able to buy this property and you are able to build equity right away. Okay? So if you need more clarification, please reach out and I'll be happy to chat with you. Mortgage life insurance. If the owner passes away or whoever is on the mortgage, this covers the balance owing on the mortgage. Okay, so please discuss this with your financial advisor or your lender because there are different options for this. Land survey fees. Lenders may require a survey of the property, but this only applies to single detached homes, and they are approximately $500 plus GST. Prepaid taxes. This means the property taxes. So depending when the contract of purchase and sale is done or is accepted, the property buyer will likely be required to reimburse the seller for any prepaid property taxes. So usually here in BC, the property taxes are due in July and you pay for the whole year. So let's say you purchase the property in September, or the transaction completes in September, which means the seller would have paid for the whole year until December. So what happens is the buyer will have to reimburse the seller from the time they take possession, let's say in September, until December. So that part, the buyer reimburses back to the seller, okay? And the lender may require the buyer to add property tax installments to monthly mortgage payments. So depending on the lender, depending on how much your down payment is, sometimes the lender would require that the property taxes be included in your mortgage payments every month. So you don't pay a big lump sum fee in July, but you pay for it every month. Prepaid utilities. A buyer is typically required to reimburse the seller for any prepayments for municipal, sewer, water fees, etc. So which means usually you have to pay the city water and sanitary sewage fees, and you usually pay for this for the whole year. So just like the property taxes, it depends on when you complete or close on your home. If the seller has prepaid for this, then you will have to reimburse them depending on when you take possession of the home. Property transfer tax. Home buyers in BC pay a provincial property transfer tax when they buy a home. This tax is charged at a rate of 1% on the first $200,000 of the purchase price and 2% on the remainder up to and including $2 million. The property transfer tax is 3% on amounts greater than $2 million. There is an exemption for first-time home buyers. So you are exempted. If you are a first-time home buyer, you are exempted if the property price is up to $475,000, and there is a prorated exemption between $475,000 and $500,000. Property transfer tax, you are exempt for new builds up to $750,000, and there is a prorated exemption from $750,000 to $800,000. Okay, so again, property transfer taxes, if you are not a first-time home buyer, it's 1% of the first 200, 2% of the amount over 200,000, 3% of the purchase price if the property is over $2 million. So for example, if you're buying a property worth $600,000, so 1% of the $200,000 is $2,000, 2% of the remainder is $8,000. So the total property transfer tax that you need to pay is $10,000. Moving expenses. So moving fees vary depending on the distance moved and whether professional movers do all the packing. So rates will vary. You will have to call around to find out how much movers charge, and of course that also depends on your budget. Then you'll have to hire different people accordingly. So going back to the down payment, for homes with purchase price less than or equal to $500,000, the minimum down payment is 5%. For homes with purchase price greater than $500,000 and less than $1 million, the minimum down payment is 5% of the first $500,000, like it says above, plus the 10% of the amount between $500,000 and $1 million. For homes with purchase price of $1 million or more, the minimum down payment is 20%. GST on a new home is 5% of the purchase price. Buyers also pay GST on services acquired such as home inspection, notary, public, or lawyer service. And GST rebate is available for first-time home buyers. So for more details, you'll have to contact your lender. Thank you for watching. This is Emily Ching from Jovi Realty. My phone number is here, my email. So if you have any questions, please do not hesitate to reach out. I would be more than happy to talk to you. And if you want any other topics done for short tutorials, please let me know. I would be happy to do that for you as well. Thank you.